Backyard news. We haven't seen active inventory this high since 2009 in all areas, but Cape Coral and Lehigh Acres inventory dropped, and while months of inventory remain at neutral levels, North Fort Myers, Lehigh Acres, and Bonita Estero are within seller margins. Absorption rates are strong, and sales hit their peak for 2024 across all of Lee County. Understanding the housing market. Home sales. This is one of the strongest indicators. The question we need to evaluate is, are sales increasing or decreasing? 4 out of our 5 areas saw the 4th consecutive year-over-year increase in sales. Bonita Estero is the only area that saw the opposite. New construction permits. Are they increasing or decreasing? Permits start to drop before a recession and increase prior to an expansion. In both Cape Coral and Fort Myers, new construction permits are down. Mortgage default and foreclosures. 2 things to look for. Are the default and foreclosure numbers traditionally high or low? And more importantly, is the number increasing or decreasing? In our area, 1% of total sales are distressed properties, indicating a below normal average market. Interest rates. Again, there are 2 key aspects of this indicator to monitor. Are interest rates relatively high or low? And are the rates rising or dropping? Buyer demand based on rates are telling and can quickly predict the temperature of a market. 5 to 5.5 is a strong market. 6 to 6.5 is a good market. 6.5 to 7 is a limited market, while 7% or higher is a weak market. Supply and demand of home inventory. 6 months supply is a level playing field. 4 months or less begins to be a seller's market and prices will rise. Over 6.5 months of inventory leans towards a buyer's market, and prices will decline proportionately to the supply of homes. Days on the market. This stat provides a big clue as to what the market is doing. 90 days on the market is neutral. Over 120 days means it's a down or declining market, and you can expect prices to drop. Under 70 days means it's a very strong seller's market and prices will rise, and likely rise significantly. 2 neutrals, Cape Coral and Fort Myers, and the rest is teetering on a seller's market. Understanding mortgage indicators. There are 3 things to look at to understand where mortgage rates will go: inflation, federal funds rate, and geopolitical events. The first thing you want to be looking at, of course, is inflation. We talk about this all the time. We say inflation is the enemy of long-term interest rates. And when inflation is high, mortgage rates tend to be high. Federal funds rate, that's a reflection of what's happening in the broader economy. Mortgage rates are indirectly influenced by the Federal Reserve's monetary policy. When the central bank raises the federal funds target rate, interest rates go up. Currently, we're at about 5 to 5.5. The federal funds rate is what banks charge each other and consumers to borrow money. The Federal Reserve has been raising the federal funds rate. They've been trying to slow the economy. Raising the federal funds rate makes it harder to borrow money. Federal funds rate look at the following economic indicators. They look at labor, inflation pressures and expectations, financial and international developments. Lastly, geopolitical events. There's a lot happening in the world around us that impact the economy, that move these things in the financial markets.
Thanks for watching. See you again next month. And remember, success is your only option.